Okay. Okay, can you guys hear me? No? Hey, Fenster, can you hear me? You can now. Okay, okay. All right. Let's see. Where the hell? There it is. Hello, hello. Yeah, there is a 20 to 30 seconds delay. Gonna go over everything like I always do when it comes to trading futures. So I know I announced this morning on Wolf Financial that I'll go over futures basics. Basically, everything that you need to know from like A to Z, whether it's funding your own account, whether it's trading, with the with prop firms, whatever it is, I'll go into all of that. So okay, if you guys want to follow along, just go to propfirmtrend.com, click on the trading resources, and then here where it says futures trading basics, and then I'll go ahead and get started. Let me just pull some stuff up first. Okay, and I will go ahead and answer any and all questions at the end, guys. I don't look at the chat when I'm trading or when I'm going over the webinar, just because I don't want to get distracted. So if you've been through this, you know what this is like. Otherwise, if you haven't, this information might be a little overwhelming. That's okay. You can always, refer back to this, and it might take a few times for you to kind of understand it, but there is quite a bit of information. It'll take me about an hour or so to get over through all of this. So, all right. So basically, the purpose is to teach some of the fundamentals of how futures work, how you can trade them on your own account, and how you can get a funded futures account. Since I believe that many would benefit from adding futures trading to their skill set. Okay, so futures trading. So what are futures? Futures trading is basically a contract between a buyer looking to invest and a seller where the contract is made for the future and has an expiration date. There are two participants, hedgers and speculators. Hedgers protect their assets from risks, and speculators are usually floor traders. As retail traders, we are considered speculators. Futures contracts are available on 5 different assets: equity index futures, interest rate futures, commodity futures, currency futures, metal futures, and they all have expiration dates. Your broker, whether it's NinjaTrader or Trade-O-Vate or Interactive Broker, TradingView, whatever you're trading is going to, or through, I should say, is going to automatically prompt you to roll over your expiration date. As you can kind of see, it's going to say auto rollover notification. You would just click yes. So equity index futures, typically it expires on a third Friday of every third month. And we, quarterly expirations, which is March, June, September, and December. And it, same thing with, NASDAQ, their quarterly expirations, March, June, September, December. However, if you're trading interest rates or if you're trading currency or metals like gold and silver, oil, those are monthly expirations. Some of the key terminologies that you're going to hear about that are used in futures trading is lot or contract, basically a unit of this instrument, tick, the smallest price movement that a futures contract can make, point, $1 move or one handle. Globex is an electronic trading platform used for derivative futures and commodity contracts. However, traders also use the term Globex to mean the overnight session of the market. And regular trading hours for specific exchange is that RTH. Let's see. Contract month, the month in which a futures contract expires. Margin is the amount of money required to be deposited by a trader to open a futures position. Okay, so first off, the market is essentially futures. So we frequently discuss ES, and the S&P 500 futures are those. So although these futures are traded similarly to other derivatives, leverage is what they offer above all else. And futures trading is simply a very leveraged form of stock trading. So to contrast with futures, an E-mini S&P 500 futures contract offers roughly 32-to-1 leverage. Because ES, or whatever you're trading, it trades in ticks, aka 0.25 spread. One contract changes value by $12.50 for every 0.25 it moves. So you gain or lose $50 when ES moves 1 point. So for example, if ES changes by 10 points, you either win or lose $500. Now, most often futures that we see or we use are ES, MES, which is kind of like SPX and SPY, NQ, MNQ, which is the QQQs. CL is for oil, GC is for gold, and basically these trade in a manner more akin to shares than options. There's no theta, no IV. Stop losses can be placed at precise price points, and each futures contract has its own specification, including the size of the contract, the tick size, which is that minimum price movement, and the delivery date. Micro E-minis are 1/10 as small as E-minis. So with that, S&P 500 micro E-mini utilizes a $5 multiplier, whereas the E-mini version employs a $50 multiplier. So let's say NQ, for example. One NQ changes value by $5 per tick or $20 per point. However, one MNQ changes value by 0.50 per tick or $2 per 1 point. CL, so if you're trading oil, it changes value by $10 per tick or $10 per 0.01. So each penny or each tick is worth $10, and it's $1,000 per point. So if oil is trading at $60 and it goes from $60 to $61, that $1 move is $1,000, because every single penny that it moves is $10. So futures market is open 23 hours a day. You must close out your positions by 4:59 p.m. Eastern if you're trading funded prop accounts. It opens on a Sunday at 6 p.m. Eastern and closes Friday at 4:59 p.m. Eastern. Typically, the best times to trade would be during the New York Stock Exchange open or during the European markets, which is in the middle of the night. And you would also need to check during the holiday hours, as the hours may vary. So, many new traders jump straight into trading NQ or ES and, thinking, hey, they're just trading futures, when the risk is equivalent to trading the full index value. So think of it, if you're trading options and the first thing or let's just say you started just trading options, the first thing you do, instead of trading SPY or QQQ, you jump into trading SPX or NDX. So it's the risk is pretty high. And instead, what most traders should be trading are the micros, which is MNQ instead, which is trading more like QQQ, or trading MES instead, which is like trading SPY. One NQ contract moving 50 points equals $1,000 gain or loss. One ES contract moving 20 points equals $1,000 gain or loss. But when you're trading with the micros, it's 1/10 of the risk. So basically, don't trade NQ when your account size says you should be trading MNQ, and don't trade ES when you should be in MES. So this right here is kind of a comprehensive futures contract specification. Here it's going to give you the description of the asset, the ticker, the minimum tick, and also the dollar amount per tick. So a lot have been trading silver lately, and silver is pretty. The minimum tick is 0.005, and it's $25 per tick. If you're, like I said, if you're trading oil, each penny that it moves, it's $10. But if you're trading S&P 500, every 0.25, so every 25 cents that it moves, it's $12.50. So you can always refer back to this. All right, let's see. So basically, there are different ways of getting funding. Okay, so I'm going to start out with funding your own accounts with your own capital. One way is to trade in micros, which cost roughly $2,347 for an MES lot and about $23,000 for one ES lot. And that's if you're using Interactive Brokers. Also, you would want to check with your broker how much capital you would need for these, as margins do tend to change from time to time. I probably need to check on that right now, but another way would be to use a broker that specializes in futures, such as NinjaTrader or Trade-O-Vate. AMP is another one. So basically, instead of the $23,000 for traditional brokers, Trade-O-Vate offers a $500 to $1,000 day trading margin for E-mini contracts. Micro contracts are even more affordable. MES costs only $50 day trading margin, and MNQ costs $100. This is for the day trade margin only. Overnight positions require the full margin, the full initial margin. So NinjaTrader actually owns Trade-O-Vate, so you can fund NinjaTrader and use the money in Trade-O-Vate platform. You can also practice on a sim Trade-O-Vate account. So basically, the distinction is that when you purchase or sell a contract, you are not purchasing ES shares. Therefore, it costs the same amount of money to buy or sell one contract, regardless of the price at which ES is trading. A margin is a term for that. So for a broker that specializes in futures, as a result, it is actually fairly affordable, making this a wonderful choice for those who feel comfortable trading their own money. And also margins do change based upon news events. So you would want to, check with your broker for that. So if you see here, it says day margin, initial margin. Basically, Tradeovate offers reduced margins for both the day session as well as the overnight session. And reduced intraday margins are currently available from 6 p.m. until 4:45 p.m. the following day. So almost 23 hours. What does that mean? So for ES, you would only need $500 for that day margin for that 23 hours of trading. NQ, it's $1,000. So if you're trading the micros, for MNQ, it's $100, and for MES, it's $50. Now, if you are a swing trader and you want to swing these, or if you want to hold your position between 4:45 p.m. and 6 p.m. Eastern, so for like an hour and 15 minutes, then you need to have the initial margin. So for like one NQ, it's $33,000. Or if you're trading the micros, for the MNQ, it's $3,384. So as a scalper, as a day trader, I can open up my position at 6 p.m. Eastern, close it by 4:45 p.m. Eastern the following day. There's no PDT. I can open and close as many, times as I want. So I would only need to utilize the day margin for that. Okay. And the third way, I'm sure you guys have seen this all over, would be trading prop firms. So basically, you would utilize a finance partner, also known as Tradeify, Apex Trader Funding, Take Profit Trader, the Futures Desk, Top Step, or My Funded Futures. There are many others, and Tradeify has a one-day pass. Top Step has a 2-day minimum evaluation where you can be funded in as little as 2 days. Take Profit Trader has 5 days, and Apex also has a promo right now where it's a 1-day pass. Okay, so here I'm going to use Apex Trader Funding as an example. You demonstrate to the prop firm that you are a successful trader. You must pay to enter the evaluation, which is a SIM account. Okay, if you succeed, you will then be given a funded account to trade with. You pay the activation fee. Also note that some firms don't have activation fees. It depends on accounts and prop firms. But you basically keep all of the proceeds up to 25K, and then you keep 90% of the profit after the first 25,000 you earn, while they keep 10%. Also, you want to make sure you go and do your own due diligence with all of the firms, read the rules. That's the most important. This is where people don't blow their accounts or, don't get a payout because they didn't read a rule. For example, hedging on funded accounts. They will not let you run an account one way and then run another account the other way once you're funded. So there are rules that you need to kind of be aware of. Also, some people get multiple accounts when on discount so they can trade them at the same time. There is a trade copier you can use, and each account must pass the performance evaluation. Now, is this too good to be true? Not really. Most traders fail due to lack of discipline, and this is how these companies make money. Okay, if you can trade the chart, such as price action, if you can stay disciplined, and are consistent, then you will make money. There are people all over that have already withdrawn their funds, but they're also consistent. The worst that can happen is you lose your evaluation or your, account evaluation fee. You do not pay back any capital. You can also take these evaluations as many times as you want. It's not just once and that's it. In addition, there are trade copiers, so you're able to trade your own funded account on NinjaTrader with your other prop firm accounts. So in my opinion, if you, the greatest if you just want to test it out, although they do have some strict rules, you're essentially forced to have good habits by these rules. Okay. would be to utilize a prop firm. Now, why prop firm versus trading your own money? This right here is from Take Profit Trader. Basically, simply put, most traders are undercapitalized. You level the playing field by using their accounts, not your own funds. Trading your own funds can lead to severe losses. However, if you're using Take Profit Trader, your losses are limited to your associated challenge fees. All technology and account setup are done by them. There's no, extra documentation or any painful account setup experiences. Lack of discipline haunts traders, and the risk management system and rules will make sure that you stay disciplined during your trades. So I'm going to go over these 3 different drawdowns, and I'm actually going to pull up different firms so that I can show you guys, because when I get back to that, it's going to be important. Let's see. Profit Trader. Apex Trader Funding. What is the... Okay, let me just make these bigger. All right, so let's start with Tradeify. Notice here how it says account type. There's growth, select, and lightning, which is instant funding. So growth, you can, you need for a 50K account, it's $97. Profit target is 3,000. If you don't go below this is end of day trailing. If you don't go below that, $2,000. You would pass the account once you meet that profit target of 3,000. Select. This is actually one of my favorite plans from them. Basically, there's an evaluation. The profit target is only 2,500, and your end of day trailing is 2,000, meaning not to go below this. And once you're funded, there is a 40% consistency, and I'll talk about consistencies. Once you're funded, you can either choose to pull out money daily or flex, which is every 5 days. If you choose to pull out money daily, your max payout per day is 1,000, but if you do the 5 days, your max every 5 days is $3,000. Okay. And then if you, let's just say you've already traded futures, you want to skip the evaluation, you can go to Lightning, which basically, they have different sizes, 50K, 100K, 150K. But basically, there's no evaluation. You're basically funded it instantly. So anything that you make in this account, you get to pull that out. You need to look at the payouts and how that works. But the payout frequency on this is every 5 days. And the consistency is 20%. Okay, so this right here, Take Profit Trader, for a 50K account, your profit target is 3,000, end of day trailing. And it takes, with Take Profit Trader, it's a 5-day process to pass, okay? They also have a 50% consistency. So if, let's say, today you make a $1,500 and tomorrow you make $1,500, and you still need 3 more days to trade, then you can actually then just flip a contract on the other 3 days. So you can just go in, let's just say MES, you click buy, goes through, you click, close out your position, that counts as a day. As long as, so unless, if they don't want you to make more than 50% in one day. So if you make $1,700 in a day, then your profit target is going to move up. And I'll show you guys that when it comes to consistency. Apex Trader Funding, they have 90% off. If you scroll down, there's Wealth Charts, Rhythmic Plan, Trade-of-8 Plan. So same thing when it comes to profit goal, $3,000 straight. So their trailing threshold is 2,500, which is higher than, or their drawdown is a little higher than the 2,000 the most other firms allow. Daily drawdown is intraday trailing. And right now it's their 50K accounts is like $19, I think. And then if you go to Futures Desk, they have a static account, which the reason why I'm showing you guys this is because it's important to understand the 3 types of drawdowns. This is a trailing drawdown. If you look here, basically the floor rises as you profit. However, if you have a static drawdown, the floor never moves up. Okay. They also have end of day trailing. The difference is between take profit trader, once you pass that, after that 5 days, you can start to pull out money daily with, there's a daily withdrawal, and there's also no consistency once you pull the money, or once you pass your evaluation. And Futures Desk, same thing. Once you pass and you build your buffer, there's, daily withdrawal. There's no in your live funded or live brokerage, there's no consistency, no cap. I think a minimum to pull out is $100. So, and you can also withdraw into your buffer. All right, so back to this. What does that mean? So the drawdown is basically the maximum loss you're allowed to have before your account gets breached. And understanding how it's calculated is crucial for risk management and choosing the right prop firm. So intraday trailing, how it works. Your drawdown limit moves up with your balance and unrealized gains throughout the day, but resets on the daily starting balance each day. So let's just start with a 50K account. So 50K account with a $3,000 drawdown. Your day starts at 50,000. Your drawdown is 47,000. At 10 a.m., you make $500 profit, which is 50,500. Your drawdown moves to 47,500. 11 a.m., you make another $300, which is 50,800. Your drawdown now moves up 47,800, which is at $3,000 behind that 50,800. Let's say at 1 p.m. you open a position with $600 unrealized gain. You're at 51,400 unrealized. Drawdown moves to 48,400 and trails unrealized gains. 2 p.m. you close that position for $400 realized profit, which is 51,200. Your drawdown stays at 48,400. It doesn't go down. And let's say at 3 p.m. you lose $400, which you're at 50,800. Your drawdown is still going to stay at the 48,400. It doesn't go down, which means your remaining drawdown is about 2,400, because it's that $3,000 behind your live moving unrealized profit. However, once you get funded and you pass your evaluation, this account here, the intraday trailing, becomes the static drawdown. And so in this scenario, let's say once you are over your you pass your evaluation, you met that $3,000 goal, you are trading your funded sim account, you are at 53,100. So as soon as you go over that 3,000 plus $100, the account becomes static. So if you I don't know, let's just say you're up to 60,000, you can lose $7,000 and still keep your account, because that static becomes the floor and it doesn't move. Okay. End of day trailing. So how that works, your drawdown limit only moves up based on your ending balance at the close. of each trading day. So for example, 50K account with a 3K drawdown. Day 1, start 50,000. Your drawdown is 47,000. Total drawdown available, 3,000. During the day, you're up to 51,500, then down to 50,800. Your drawdown's still going to stay at 47,000 all day. Total drawdown available is 3,000. Day 1 close 50,800, drawdown updates to 47,800. Your day 2 starts 50,800. Drawdown is 47,800, which is $3,000 from the new starting balance. In static account, this is my favorite. Not many firms offer it, and some of the firms that do offer the static drawdown is not. There's only one firm that offers a really good one, and that's the Futures Desk. You get a pretty nice static amount, and it's very comparable to the end of day trailing, whereas others will give you a really small drawdown when it comes to static accounts. Static accounts are more, they mimic more of your own cash account. Okay, so your drawdown limit is fixed based on your starting account balance, and it never changes. So for example, 50K account with a 3K drawdown. Your account starts at 50,000, your drawdown is 47,000. Week 1, grow to 55,000. Drawdown stays at 47,000. Month 1, grow to 60,000. Your drawdown stays at 47,000. Month 6, your account is at 75,000. Your drawdown is still at 47,000. Now, reality check, you can lose $28,000, which is, if you, and still breach your account, because if you fall under that 47,000, you lose your account. So that's kind of what it means. And that's actually, I found out that most futures traders do not understand the static drawdown, which is very interesting because they're trading futures. All right, so here is, a few, comparable ways of some of the prop firms. So for example, like Apex Trader evaluation. So right now they've got a 1-day pass and 90% off. And once you there's no consistency rule so if you make $3,000 today, the next day, the next closing day, you would get an email saying, hey, you passed your account, and then there's an activation fee for the SIM funded account. In there's a 30% consistency rule on funded accounts. If you're, using Tradeify, I kind of went a little bit over some of their accounts. Same thing with Take Profit Trader and Futures Desk. A lot of them are very similar to each other, I would say. But here, if you guys want, there's a little calculator. It's called Firm Cost Calculator, and you can come in here and compare. So for example, let's just say Tradeify. Let's just do select. I think it's a 30% off right now with Top Step, 50K. So both of them are end of day trailing. If you look down here, Tradeify does not have an activation fee. So the final price is $111, whereas, Top Step does have an activation fee, but they have actually recently changed some of their plans where they have both activation and no activation. So I need to actually update this. Another thing you can do is if you want to just continue, you can compare the same firm with let's just say, I don't know, 150K account, and see what the final price would be all in. Another thing you guys can do here is go and add your, the accounts that you've bought. how much it has cost you, how much you got funded, or how much money you've pulled out, to kind of keep track of everything. And actually, there is, I'll post it later, but there's I don't have it here. Anyway, I'll skip over that. Okay, so here you can come in and just look at some of the featured firms. There are over 80 to 90 prop firms, guys. If I scroll down and see where's this comprehensive futures prop firm list, there's a lot of prop firms. There's some that have been closed, or they were financial futures. Someone out of business, whatever. It's important that you guys do your due diligence on prop firms. Just because it's a prop firm does not mean it's good. Okay. I get promotions all the time to partner with a lot of these firms, and I basically decline just because if I don't see myself trading it, I'm not going to partner with them. Or if I see that some of their rules are very what do I call it? If they're too good to be true, it probably is. Okay. Some of the firms that I personally like are the top 8 here. There's Alpha Futures is another one I haven't added up there. Those are very stable firms that have been around for a long time, and they've proven themselves in this market. Another thing you can do is, let's just say here you want to kind of I don't know. Let's say you want to pick a firm that does static accounts. Whoops. Or yeah, I don't know, end of day. It will pull up all of the firms that have that end of day trailing, and then you can kind of scroll to the right and see what the minimum payout days are. Again, it depends on which accounts. The withdrawal types, if you, let's say you click here, it will take you to their website. Or if you do the full details, it will give you a shortened version of their plans and what they have available, that kind of a thing. It's kind of a compressed what they allow, what they don't allow. So okay, let's see. All right, so let's talk about some of the most important things, which is risk management and psychology. If you go to risk calculators, so just remember this up here, it's kind of a little reminder that small gains do add up, okay? You can calculate your futures, equities, options, position sizing. So let's start with $2,000. Let's just say you get a 50K account, you have a $2,000 drawdown. Your risk per trade, typically they say 2 to 3% is a pretty conservative way, but let's just say 5% on a really good setup. And you have a stop loss. I'm just going to say 50 ticks. So basically here it tells you if you have a $2,000 account, you're risking in a really good trade. You can use 4 micros, okay? Your risk amount is $100 per position when you're trading, okay? However, what I see and what most people, what happens is they actually trade NQ and they risk 50% of their account. So they're risking 1,000, even more. I don't have to tell you guys what that, what's going to happen when they're, um, when you do that. When you go in with 3 or 4 contracts of NQ at a 50K account for $2,000, because any movement can wipe you out. So what I always say is find your account size, put in your position size calculator, what your stop loss is, a hard stop loss. When you're trading futures, you should always have at least, have a hard stop loss no matter what, because you're going to be surprised how many times something will come through and just take you out of your position. So it's important to have a stop loss. You can always re-enter, but also you can go down here. It's got account blowout, your size, your risk per trade. And also if you input your risk to reward ratio, it'll tell you your recovery analysis. If you have 3 losses, how many wins you need to recover, things like that. And then here's a consistency rule. So if a firm says you need to have 50% or 30% or 40%, it just means that your largest single day profit cannot be over that percentage. So let's say 50% for the firm that has a 50%, like take Profit Trader, $3,000 for a profit target. You can, your biggest day can be 1,500. If you are, let's just say at 1,700, your balance is going to move up. Let's say you have your consistency is 40. Or 900. Okay. So you can just kind of play around with it and see, like, if a firm has a 40% consistency and a $2,500, balance is needed to pass, then you can kind of see what you can go up to. So there's that. And then you can go down here and look at the growth calculator. It will tell you, if you have a 1-to-1 ratio, risk per trade, what your win rate is. So let's just say you have a 70% win rate. It'll kind of tell you what your growth would be based on your risk assessment. And kind of how it grows. If you have a 2-to-1 ratio and your, win rate, even if it's 50%, you basically would need a win rate of 33% to break even. So kind of play with that. It depends. For me, like I have at least 1-to-1 ratio, but my hit rate is also like 70 to 80%. Depends on what instrument I'm trading. And then I do like to have my runners go. And down here, I know a lot of people do DCA. I personally don't. The only time I will do dollar cost average is if I'm trading one strategy where you can start out a position, have a starter, and if it continues to go, against you, you can add more into that position because it's a highly probable trade that it will, go in your favor. There's different ways to do DCA. There's a proper way, and then there's one where you're just spamming. You don't want to do that. There's a conservative way where, after every 10 points, you're adding, let's just say 1 micro. And it will kind of tell you what your average is going to end up being. There's a pyramid kind, there's moderate, aggressive. So play with these numbers. This is all free, guys. Just go to propfirmtrend.com and okay, another thing, risk management, not risk management, psychology lab. Okay, so here there's the risk management that we just went over. There's more recovery road stuff. But what I really wanted to show you, you can actually have a live price simulator, is this pre-trade prep. So before you start trading, you can go and select your emotions, whether you're greedy or fearful or anxious or bored, whatever it is. So let's just say you're feeling a little anxious and frustrated. You want to check your bias. Oh, you've got, the herd mentality, following the crowd without analysis. It will basically, you can input your biases in here, click trade, and then also put in your risk setup. It will enter, your emotional trade pre-summary, your cognitive biases, and kind of track that, because over time, you can also do post-trade review. Over time, there's going to be analytics and patterns, and those will tell you what, if you start, like for example, for me, I know if I overstay my 1 to 2 hours in the morning, I am going to get bored and I'm going to start taking trades. So in order for me not to do that, I schedule Pilates and I leave. So you just have to be honest with yourself to identify patterns of, what triggers you, because we're all different. Let's see. Also, you guys can check the prop firm health of different prop firms. This is but it'll tell you here what it's from. It's from like public data, things like that. Also, real trader reviews. And then, there are free journal. You can log your trades in here. If you are doing, like Excel spreadsheet or something, you can actually come here and enter your trades. You can either import a CSV, and import your trades, and then it'll kind of give you a little bit of an analytics. Sorry, guys, it's been a really long day. I've been at my computer since 7 this morning, and it's 8 o'clock already. What your average win, loss, your largest win, largest loss, whatever it is, what your consistency is, that kind of a thing. Your, calendar. There is an AI mentor. You can kind of help you with some risk management, trading psychology, whatever, growth calculator, same thing. Another thing is, if you want more of like a professional journal, if you click here, you guys will get a 30-day free account. There's no credit card or anything like that needed. It's very well advanced. Okay, back to trading. Resources. Pull this back up. Also up here, you guys can click on this little summary and you can print off if you need to, save this for later. So it'll kind of tell you most traded futures, what ES, MES, if you think of it this way, big ES is like SPX, small MES is like SPY, that kind of a thing. It's a little guide. You can take the quiz if you want. And I'm also working on, it's mostly done, but order flow footprint and technical analysis. It's also in this website. But this right here is Project X platform. Basically, if we are going, long, we would either join bid or, buy market. If we're going short, join ask, sell market, flatten all. You would change your instrument up here, and then there's on the left side, you can also do some trade copying. This is used by TopStep and also the Futures Desk. Other firms are not going to be using it again because they did not have their licenses renewed with Project X. So Project X is going away But NinjaTrader platform, this is what I use. Same thing for going long. You're going to go, join bid. Oh, sorry, my eye is just bothering me. Market. If you're going short, sell, close, flatten, whatever it is. Also, the ATM strategy, that's where you would enter your stop loss, your hard stop loss. You can always move your stop losses, guys, but it's always important to have it, especially if you're trading NASDAQ. And then this is Tradeaway platform, same thing. This is the DOM, and same thing, buy market, sell market, buy bid, sell ask, ATM. You can add your stop loss or take profit or just stop loss, whatever it may be. I use NinjaTrader because I actually use order flow footprint, and Tradeovate is down today, which is actually a data feed that's fed into. Geez, silver is up at 118 bucks. And that is a crazy one to trade, guys. I'll tell you that. So basically, the takeaway is if you know how to chart, whether you're using Fibonacci's, whether you're using moving averages, whatever you use to chart your, NVIDIA or SPY or QQQ, that's what you would use to chart your futures as well. So, while this might be considered easier than options, it is in respect due to no Greeks. However, most people struggle with risk management, FOMO, and mindset, and consistency is key. In the adding a risk management, that's what's going to keep you in this game. It doesn't matter if you're trading options, if you're trading equities, futures, crypto. If you don't have a strategy, if you don't have risk management, you're not going to make it. And we've all paid money to the or tuition to the market, but that's what keeps people in the game. Another thing here I want to point out to you guys is that before you trade, especially like futures, and especially if you're using prop firm accounts, you want to make sure that there are no major news. Like today we had FOMC, or if we have CPI, some firms will not let you trade their funded accounts, like for example, a minute before or a minute after. So you would always want to check to see what we have as far as the news trading economics, which they call the red folder on Forex Factory. Another thing that I do is I'll always check bar chart and Benzinga. And then we have the Financial Juice news aggregator delivering, market updates throughout the day and economic data in Discord as we're trading, just to kind of see what's, what's happening. And as I'm trading NQ or NASDAQ, I do have like the Mag 7 up. So I have like Apple, NVIDIA, Microsoft, Google, those, just to see the sentiment of where they're going. That's basically what, will start driving NQ as well. But I am going to show you guys on a sim account, just for execution purposes here. So for example, now this is delayed market, and I think they're still working on the Tradeovate thing. Let's see. Okay, anyway, let's just say we buy a market. Now, we're trading Asia right now, and basically you can see here how it says 117.25, 0.50, 0.75. So that's that 0.25 that I was talking about. And every time, now you see $65. Each tick is $5 here. 1 point is $20 because there's in NQ and ES there's 4 ticks in one handle or in $1. Now, if we do MNQ, let's see. Okay, I'm just going to close that. No. I'm so tired, guys. Okay, let's say MNQ. We sell, I don't know, let's just do sell market. Every tick is that it moves, whoops, is 50 cents and every point is $2. So that's that difference between, you know, the micros, and you want to start off with the micros. So, all right, I think I'm pretty much done with this, guys. Let's see, any questions? Would you please show how to enable the auto risk management per trade OCO that won't give stop loss and TP auto place on Tradeovate? I use NinjaTrader, so if you go to, I don't know, let's just say custom. I don't know exactly how that works on Tradeovate just because I don't really use that platform. Sorry. But let's say one quantity, it goes in ticks. So you would want to make sure that, you know, let's say your stop loss is, I don't know, let's just say 50 ticks. And then you're wanting your take profit to be 100 ticks. You can do that. They also have trailing, which, you know, you can trail. I'm not the best. I don't use trailing because it will take me out too fast, especially if it's on MNQ or NQ. As far as the OCO, I've never used it, so I know here, like the OCO orders, you right click, but like I said, I've never used it. So yeah, any other questions? All right, guys. Well, thanks for hopping on. Hopefully you guys, you know, I like the same people that show up. Thank you guys. Hi, Alex. Oh yes, one thing I did want to show you guys is the up here where it says Orderful course, because I use Orderful Footprint, as I was telling you guys a little bit ago. There is a course that I'm working on. It's free. You guys can go here and check it out. But like the technical analysis that I use, and then the bar markers that are on my Orderful Footprint. Oops, that's not what I wanted. And then mastering the Orderful Footprint. You know, and just some of the things that I look at when I'm trading, you know, like delta sweep, you know, what some of these bar markers mean. And so you guys can kind of get familiar with that if you want. See you tomorrow, Mike. Thanks, guys. I'm tired. Good night.